What's going on, YouTube? Thanks for watching this YouTube channel. My name is Matt. My company's called the DeRosa Group, and I hope you guys love my new setup here in my Trenton office. What are you doing? You know?
I'm trying to get as pumped up as you.
It's not possible, Dave. It's not possible, Dave.
Jumping jacks for 10 minutes, and I'll come back in.
Maybe you do. Maybe you should. Maybe that's why in gym gear. Maybe I did. You know? Cool. This is my great friend Dave Van Horn, which is why he can poke at me a little bit, right?
And get away with it.
Yeah, and get away with it, right? So my name is Matt Faircloth. This is our YouTube channel talking about all things real estate investing. And my book, Raising Private Capital, is in great company with Dave's book,
Bigger Pockets.
Bigger Pockets book on note investing. And Dave's a good friend of mine. And Dave is somebody who's going to talk to us today about scaling up a business. Now, a lot of you guys that are watching either are about to get into real estate investing or already are real estate investors and are operating a real estate company that might be 1, 2, 3 people in that. But Dave has built a large company. And so we're going to talk about the benefits of scaling up a real estate business today and also how to do it. So if you guys want to scale up, we're going to give you guys the tools today on how to scale up. Dave's going to lay that down for us. So Dave, welcome to the YouTube channel. Thanks for being here.
Oh, it's great.
Yeah, that's not near enough energy. You got to bring it up, right?
No.
Yeah.
Hey, it's great.
Jumping jacks, hey! All right. So welcome, Dave. So tell us a little bit about your backstory. You started like a lot of us did as a smaller operation, 1 to 2 people, but then you scaled up. So tell us a bit of that backstory, and then we'll get into the nitty gritty of it.
Well, I started out as a real estate investor, and I did bounce around a lot into figuring out what I was good at, what I wanted to do, that type of thing. The funny thing is when I started the note business, you may or may not know this, we actually had a short sale business, and the sign on the office was the short sale company, not the note business. The short sale company went out of business, and we're the note company now, right? And then today, we have 30 employees, and we're at 150 million under management, and we're growing rapidly. So it's become a bigger thing. Now, me and my partner started out as investors. It was just a couple of us putting our money together, buy some notes. Yep. We want to cash flow off the notes without tenants. Basically, we were like, cash flow without tenants? That sounds good. Sign me up. Because as I got, I had been doing real estate investing a while, and sometimes you get tired of the tenants and the maintenance.
Sometimes.
And then
that's for another video.
And then we started looking into like multifamily, and we ended up doing mobile homes and storage, and it was really to get away from the aggravation levels of things. Yeah. And then the notes kind of happened by accident, and we started out, we just put a couple of our money together, buy a couple notes, see if we like it. And then that investment turned into like a club, and then it turned into a business. And today it's like an enduring enterprise that's actually probably has outgrown me and my partners to where the people we hire, there's people we hire that make more than us now. It's like weird, right? Like you have to bring in A players. And what you learn is that human capital is more important. It's just as important as your capital. Yeah. It's not just about money.
It's the most important. Yeah.
I need an A team with A players on the team, and and then I also have to be able to not be a control freak like I normally am. And I have to let go of certain things, and I have to delegate and elevate and all that other stuff.
So when you scaled, was it an intentional, I'm going to start this business and I'm going to build it out to where it's covering this much revenue and I'm going to have this many employees or whatever? Was it like this vision thing? Or did you organically, like, hey, this thing's growing. I got to bolt on to it.
I did it the hard way, like the organic way. And what ends up happening is all of a sudden you realize I have a tiger by the tail kind of thing. And then, but looking back, the right way would have been to plan it better, have a business plan, almost like a franchise does, like the E-Myth, the book. Right. Hey, how am I going to build out this business, whether it's a real estate business, whatever that is. It could be a property management business. It could be.
It's all good on paper, though. But here's what's interesting. Like, and I'm off the rails a little bit here. But like, had you built that business plan with a note business and a short sale business, right? It's like, okay, this is what we're going to do. We're going to scale it up, right? That you allowed the short sale business isn't working. Maybe it's losing money. It's doing whatever it's doing. It ain't working. This dog ain't hunting. Working. So had you written out a 5-year script for where you wanted that business to go with a short sale business in it, you might have thrown more good money after bad to keep that thing going. So I find that there's a hybrid, for me anyway, there's been a hybrid of growth in that this is where I want to go, this is how I want to get there, but I'm also open to change, right? I'm also open to redirection. So for you guys, it's important to build, you would say probably build like a 3 to 5 year plan for where you want to go, a la E-Myth kind of thing, and systematize it out, but also be open to adjusting that plan because things are going to happen. And, you know, this is when we were scaling up a flip business, and we're doing more bread and butter, you know, properties that we're selling for max 250, 300,000, right? Well, somebody approached us with a deal that was going to sell for 800,000, right? It was a really profitable flip. Now, had I had my 100% blinders on and said, I'm not going to touch anything that's going to sell for any more than 250 because that's my script. Now, that would have been easy. It's easy to scale like that, but you also do miss some opportunities that come off on the fringe. And I think that there's an opportunity as an entrepreneur to make that, you know, decision. Would you agree?
Yeah, I mean, there's a balance for sure.
Yeah.
I mean, and it's kind of like if you go into an investment, do you know your exit before you go into the investment? Now, I get you don't always know that, but because something could deviate, change your mind on how best to exit, right? Mm-hmm. But I think if you can get an idea of what your exit is or what kind of investor are you?
Yes.
Right? So if you really think about it, I was an investor that was investing in notes for cash flow, but now I've become an investor in a saleable business. Mm-hmm. So I'm still an investor, and I still invest in notes. Yeah. So I kind of do it all, right? I have notes, I have real estate, I have all these different investment buckets, so to speak. But owning my business is just one more bucket now. Yeah. And then that business is a saleable business. So it's really, what is your goal? Do you want to build something that is saleable, or are you building a job? That's another piece, right?
Ooh, that's an interesting thing. So when you say building a job, what do you mean? That's interesting.
Well, if I have like my oldest son has a painting company that revolves around him.
Yeah. He is the business.
He is the business. So if he gets sick, the business kind of shuts down. If he's out of work, the business shuts down. It's not a saleable business because it all revolves around him. Yeah. He doesn't have enough systems and processes in place. He doesn't have, he's a painting contractor. He doesn't have an estimator. He doesn't have a foreman. He doesn't have, well, he might have a foreman, but he doesn't have enough of that built out that too much revolves around him. He does a lot of the bookkeeping. He does the estimating. Like,
Whereas is it okay?
As you skip, it is okay
to be the business. It's like I know a lot of people that are the business and they do very well. I mean, like doctors, lawyers, cardiologists. He does
extremely well. My son. He does extremely well. He's tripled the business from when I owned it. I had that same business. I got hurt and left that business, and then he's that business. Van Horn Painting's been around 28 years, but it's still not the way I would like to see a business where I would pay him for it.
Yeah. You're not buying.
I'm not
going
to go, here's $2 million to buy that business because it has a multiple of X, right?
So why would someone want to? Well, let's go there. Why? Like, let's say somebody watching right now is facing. Okay, do I want to scale or do I want to stay small and be the business, but also kind of get to live life on my own terms, whatever it is? Maybe are there benefits to staying small and going onesie twosie, not bringing on a bunch of employees? Maybe that's one of the things right now that you don't want to deal with, right? But why? Why would someone like your son or whatever decide to stay small, be the business in that versus scale?
Well, at some point though, it stunts your growth. He's feeling that now. He's got like 6 trucks on the road. He has all these guys, and he comes to me, Dad, help! What do I do? Because he's got the tiger on the tail now. And he's like, what do I do? And it actually stunts his growth. He can't really grow anymore until he fixes some of these issues, right? So it's one of those things. But
did you get to that point in your company with your note company where you and your partners were the business and you had that crossroads where it's like you said, E-Myth and all that, and it's like, listen, I gotta.
In some ways, we still do, but we did have a professional HR person at some point come in, define everybody's roles, pay market-based wages, all those things, and you set it up like a real business. But I think the first question that someone asked me, it was like an advisor of ours that asked this question. He was like, "How many notes could you do if the notes were free?" So it would be like if you were doing flips, right? You're flipping houses. It's like, well, how many flips can you handle in a month?
Yeah.
If the flips were free, how many could you do?
Yeah.
Well, I could do 4. I have a buddy that does 8, or I can only do 1.
Yeah.
Right? Well, my buddy who does 8 flips a month, he also has 4 crews, right?
Yeah.
And he keeps them busy.
It's
all
the only
the
way
time,
to do
right?
8 flips a month.
Right,
Yeah.
right. So you get what my point is, and then some people, I remember my goal was to own 1 house a year, and then it became I want to own 20 free and clear, and then it became I want to own 100 houses, right?
Yeah.
How many times have you heard that?
Yeah.
I have a buddy Dan has like 1,500 houses, right?
Right.
So it's how big,
How big do you want to?
But there's always 3. I call them 3 pillars to your business. It's sources of product, it's capital, and then it's scalability.
Okay, so
And that's every business.
sources of product. Let's go through each one of those. Sources of product. What does that mean?
Well, like deal flow, right? So
Yeah.
that's your sourcing, right? So for me, it's notes, right? For you, it might be properties or
multifamily.
multifamily.
Yeah, if I'm buying
so
multifamilies,
you're
right,
sourcing
yeah.
multifamily deals. Then you need capital for those deals, and
So
then
that's
you
your
need to
investors,
scale.
yeah.
So how many multifamilies could you manage to purchase in any given year?
Right.
Follow the logic?
Yeah.
So you might say, well, I can only handle the purchase of 4 or 2
Mm-hmm.
or 10, whatever that is. Now, because it's a function of how much capital you can raise, it's a function of how much team you can have on
Yeah.
the ground there. And then you might go, well, I got to grow gradually. I can't grow, just so you want to know those kinds of numbers. And it's the same way with us. It's how many notes could we handle if the notes were free, right? How many
Yeah.
notes can we purchase this year? We're going off site this week. Actually, we're going away for 2 days. We go to this place. We get off site. It's a bed and breakfast. My whole executive team, and we plan out the year. How
Yeah.
much capital do we need to raise this year? How much product are we going to buy this year? How are we going to execute on this product and pay our investors a return, right? So it's
Yeah.
all that. It's the same thing, right?
Yeah.
So you do have to map it out because we have staffing questions. Do we need to hire more people? Do we need to hire different people?
Yeah. So even for a smaller investor, this conversation plays, right? So it's purchase. It's the product flow. Call it like your product pipeline. How wide can I make that? So for you, how can you attract, draw more good note investments into the company? That's question one for me. How do I draw more multifamily? For somebody else watching, how do I draw more flips or more wholesale deals? Whatever it is, my product pipeline of what I'm offering. Correct? Is that what it is? And the second one's capital. And for you and I we're both offering investments for private investors. So is that always private investment through the capital flow, or is it also?
Well, we're actually getting more
loans
towards
and-
institutional and securitization now because we've really, really grown, right? So it's, I had an executive coach. He would ask me this question every 6 months, and it would be, what one thing, Matt, will catapult you in your personal life or your business life in the next 6 months?
Yeah.
What one thing? And it really, that's a focus thing. And what it does is it forces you to hone in on, okay, what 1 or 2 things would dramatically impact me building my personal investing or me building my business? What is that 1 or 2 things? Now, that thing's going to change because I could come back to you in 6 months and go, all right, Matt, I'm going to ask you the same question. And you might go, well, I needed more capital. But you know what? I got more capital, and now I need
more deals.
Now I
right?
need a new bookkeeper now.
Yeah.
And I now new technology on, property management technology would really solve a big problem for me. And I want to invest in that and implement that this quarter or this half of the year or whatever. So it's that type of question that you got to keep asking yourself, what's really going to 10x my business?
What's going to help me
10x
grow?
my investing? It's a great question.
It is. On the scalability side, I've asked, what are my bottlenecks? Like the other side of it. Like you're like, what's going to help me grow? There's also another question you can ask yourself that I've asked myself many, many times. It's what's standing in my way now between where I'm standing and where I want to go. And a lot of times that is the scalability question because it's like, well, what's holding me back from growth? It could be my bookkeeper, could be my team, could be my focus, whatever it is. Is that how else do you measure?
We do the same thing. We look at what's called a SWOT, your strengths, your weaknesses, your opportunities, and your threats.
Yep.
Right? What could really damage the business this year? What could really hurt us? Well, maybe it's deal flow. Maybe it's regulations. Maybe it's who knows, right? And I think it's good to do that. The other thing is we use an operating system. There's operating systems like EOS, Rockefeller Habits, Scaling Up, those types of. We use Scaling Up. We also use components of EOS, which is Entrepreneur Operating System, Gino Wickman, those traction book.
I just signed up for Strategic Coach.
And Dan Sullivan.
I just signed up for it. Yeah, so Strategic Coach it's not cheap, but it's a great program.
So probably for the last, I can't tell you how many years, I've had different coaches with different executive So that's something that's a big deal to me is having the right coach. Because it's not that I've had the wrong coach, but sometimes you outgrow a coach or you outgrow an executive. Well, I've been in executive groups where maybe a dozen CEOs get together on a monthly basis, and they act as your board of directors, basically, because you're a small company.
That's is that what is it, EO or Entrepreneurs Organization?
Yeah, it's similar to that. That's
I'm in
one.
GoBundance is another one that I'm a part of.
Yeah, exactly. I'm in CEO Think Tank. And I am familiar with GoBundance. It's those types of programs that benefit us tremendously because
it's council of peers.
You get great connecting and networking. You get great advice from other people, and it's the right fit for where you are on your journey.
And most importantly for you guys watching, if you're going to seek a peer council group like that, make sure that there are people in that group that are ahead of you in the down the path, right? Because I've been a part of groups like that I started out, entry level down the bottom, and I worked my way up. And at some point I looked around the room and realized that I was, and I'm not pounding my, whatever, I was the most successful guy in the room. I'm like, oh, okay, that's awesome. I've graduated now.
You're in the wrong group sometimes.
But at some point you graduate, and that's okay. So peer council groups, we've named a few right here, and you just look for something that's at the level you guys want to be at. If everybody in the circle is all the way up here and dealing with way different problems than you are, then you're in the wrong group. And if you're the most successful person in the group, you're in the wrong group. It's got to be right in the middle. Also, I have not always had a business coach. I do now, but I've not always had a business coach supporting me. And I think that the importance of having a business coach, and strategic coach is one that I've signed up for. I know you're familiar with it, and there's some other ones that you're that you've mentioned as well. That business coaching services that are out there. If you want to mention,
you can start out small, right? Some of them are inexpensive or free or almost free, and then some are based on your company's size, number of employees, or it's based on revenue.
There's even New Jersey Score,
right? There's some that are like, well,
that's free.
You're under $1 million in revenue or $500,000 in revenue. Some are like, oh, you're under $5 million in revenue. You might be under $50 million in revenue. 100. You're gonna move up, and you are correct. I remember one group I was in. I had 25 employees at the time, or something, 30 employees. And this gentleman came to one meeting. He had 250 employees. The next meeting, he had 400 employees. I'm like, whoa, what?
This
guy's on fire, right?
Yeah.
Or they're selling their business. But you can learn so much from. They have the
coaching
same challenges,
services.
and they have.
You're not going to see what you need to see sometimes, because we all have blinders on in life, and a coach we see what we're going to see in our own spectrum, right? A coach's job in some ways is to see what you don't see and to help you shed some light on it and help you get where you want to go. So if you are working through this on your own, there are free coaching services out there you can get yourself involved in. Like I said, the Small Business Association, the SBA, has some coaching services you guys can look into. So. This has been a great conversation regarding scale. So again, scale's not for everyone. You don't have to. I do not believe that you don't have to build a $1 billion company to be successful in real estate investing. Right? You agree with that?
You can definitely be lean and mean and outsource everything and do phenomenally well. I mean, there's people that are one-person businesses that are internet businesses. Or all kinds of things.
But what Dave and I have chosen to do for our companies is scale, build, and put in a larger team. There's a lot of benefits to doing that as well. So if you're looking to scale and build a larger business, affect more lives, have more employees, build something a little bit larger that you can leave a legacy, and there's a lot of whys you might want to build a scale. I mean, I think it's all evident on why you would want to build a larger company. So that's the direction you want to go. We've given you guys some resources today. So again, tell us briefly about what your company does and how people can find out more about you.
I have more than one business, and you brought that up. I have one business where it's 2 people. I have one business, 3 people, and I have one business, 30 people. But my main business, though, is PPR Note Company. It is the biggest company I have, and it's my main business. And basically we're fund managers of distressed mortgages nationwide. And
Okay. So if you guys are looking to consider note investing, this is my recommendation sources where I would send people to consider note investing. I actually talking to an investor the other day, and I said, hey, you should diversify. We pulled up the website together. Look at PR Note Investing, check it out. So they want to hear more about that, they can go to
pprnoteco.com.
pprnoteco.com to hear more about Dave Van Horn's organization, and you can take part in the success that they're building and consider investing in some notes too. Cool. Thanks for watching, guys. Dave, thank you so much.
Matt.
Been great having you. Great having you here. Thanks for watching, guys. Have a great profitable week.
Bye, guys.